Okay, good morning. This is part two of financial management for projects. It is part of the Southern Vermont Economy Projects Project Development Series. How many times can I say project? It's a key word here. Yesterday we had Gary with UVM Extension sort of go over the basics of budgeting. And then today we have Bobbi who is with BDCC, who's gonna sort of do the deeper dive and walk you through, a real live project budget and all of her beautiful spreadsheets. And then after Bobbi's gonna present for about an hour, and then after that we have Jen Stromson of BDCC, who is going to facilitate a conversation with John Michael Muse of USDA Rural Development, Katie Buckley of VLCT, who's going to be talking about ARPA funding, and Kevin Weiberg of the Vermont Community Foundation. So that's sort of the getting more money section of this presentation. And again, this is being recorded. So if you need to replay or share it with someone, it will be available to do so. And then if you do want the one-on-one with Gary next week, shoot me an email and we will get something scheduled. I'm going to pass it along to you, Bobbi.
Great. Thanks, Sarah. Good morning, everyone. So I was looking back at my notes from this presentation last year, and at that time I noted that that was my very first Zoom training, and it feels so long ago. I'm certainly not an expert like Sarah, but I'm going to try running my presentation this year. She did it for me last year, so bear with me. I am working off from two screens, so if you see me kind of look back and forth, I'm trying not to be rude, but I have a lot of notes that I want to pass on to you, so I will make sure I cover all of those. So again, I'm Bobbi Kilburn. I'm BDCC's Director of Finance and Grant Management. I've been with BDCC for about over 6 years now, but not that I want to date myself. I do have over 25 years of budgeting experience, ranging from $5,000 projects and programs up to $200 million for-profit entities. So I hope that I can pass on some tips and some suggestions for preparing your budget. We'll walk through a lot of different things today. Some of it will be follow-up from Gary's presentation yesterday. Thanks, Gary, for covering some budgeting tidbits. But I'll work through different types of budgets, provide some tips, and walk through some actual scenarios and give you access to some spreadsheets that I'm happy to share if you'd like those. So starting off, I'm going to cover business capital, program, and project budgeting, but frankly, I don't see a difference between any type of budget. It is really basically a plan for how you're going to use your money, the money coming in and the money going out. So regardless of the type of budget, and in addition to the budget being a plan for how you're going to use your money, it also provides a tool that reflects your organization's programs, your overall mission. Regardless if you're for-profit or nonprofit, you have some type of a mission, and your overall strategic plan. So we'll walk through 4 different types of budgets today. The first is your business budget, which is your organization's financial plan. This is going to support the need for you to have good fiscal policies and procedures and financial accounting for both nonprofit and for-profit entities. We'll talk about capital budgets, which is a process for evaluating major projects or investments, as Gary spoke about yesterday. It's a measurable way for determining the long-term economic and financial profitability of any investment project. For instance, building improvements, renovations, equipment purchases, those types of things. And we'll talk more about that in a minute. I've separated out program and project budgets. We're going to look at those later on as one type of budget. But the reason I broke those out is I look at program budgets as a framework allowing your organization to allocate different resources to activities that ultimately roll up into your business budget. So you may have one program that you're budgeting for. You could have 10 programs that you're budgeting for. I break out those budgets separately and then roll those up into my business budget. So an example of that is if you have a program where you're providing services to others, maybe you're going to expand that service provider programming. So you now have multiple programs that you're budgeting for. Projects, I look at those a little bit differently. Those are costs that are needed to complete a project over a defined period. So I use those budgets to estimate the cost of a project that will have phases to it. So for instance, a library addition, as Gary spoke about yesterday, that's going to have a start period and an end period and associated costs associated with that and income associated with that, hopefully, that will ultimately roll up into your business budget, but it's going to be for a finite period of time. And Sarah, if you wouldn't mind just keeping an eye on the chat for me, I will take some breaks as we move through some of this.
Yep.
So I wanted to just provide some top tips for success. And there is no science to this. This is based on my experience over time. Hopefully you'll find something useful here. But I have basically 5 sort of top tips that I use. The first is understand what you're budgeting for and why you're budgeting for it. A budget is really a guide to assist you in making better spending decisions. So you want to use it as a way to identify areas of improvement or gaps in your budget. Don't look at budgeting as a hurdle. It's probably, some of you will laugh, but have fun with it. I mean, you know, it's a process, but it can be fun putting the numbers together and being able to use that to tell a story. Know your organization. You need to know how your organization earns money and spends money. For instance, if your operations are seasonal, you're going to budget differently than if your income and expenses are sort of straight line through the year. So keep that in mind. I always budget using a calendarization approach. So I budget by month, and you're going to see that in some of my examples. It really lets me see the flow of funds and to plan for my cash flow impacts. And build your right team. You should not be in the budget process alone. Bringing others into the picture really will allow you to think outside the box, understand your true costs, and folks who do the work are going to have a different perspective than you do. The second is be realistic. You don't want to develop an unrealistic budget. Your budget should be based on historical understanding and your future projections. As you're going to see later on, again, I budget by line item. It allows me to identify my fixed costs, inevitable costs, line items that may fluctuate in the past, and also one-time expenses. So that information is invaluable when you analyze your variances, which you're going to hear me talk a lot about. Be conservative. Unknowns are going to occur. The one thing I can guarantee you about a budget is it is going to be wrong. It's either going to be better than you thought or not as good as you thought. So keep in mind that you want to be conservative. You don't want to be too aggressive. You've certainly heard the saying before, you don't know what you don't know, but you know that you don't know something. So keep that in mind as you're budgeting. Be flexible. It's okay to amend and revisit your budget during the year. And what I mean by that is you're not going to necessarily change your budget, although some entities do that mid-year, but you're going to want to compare your monthly actuals to your budget so you know that what line items are going to be higher or lower than your budget. Be detailed. The budget should align with your general ledger. So keep in mind, there's a fine line between too many general ledger accounts, because it can get detailed, and you're going to see mine in just a minute. But there should be a direct relationship between the budget you're building and your accounting system, regardless of what system you're using. The Third tidbit is be aware of your financial relationships. So understand that your budget line items are going to work together. So for instance, if you're going to add to your capacity or bring on more employees, when you do your budget, you're not just going to adjust your payroll line item, you're going to need to adjust your employee benefits potentially, your payroll taxes, and any other items that are directly impacted with you adding to your workforce. So keep that in mind. You need to understand those relationships and how they work together. Utilize the right tools. I'm a huge fan of Excel, but many accounting systems now have budgeting modules. So you need to figure out what works best for you and what allows you to work smarter, giving you access to good information. And then my last top tip is share the budget. There's certainly some areas of your budget that are sensitive. You can roll up that section of your budget. I'm a huge proponent of sharing the budget. Again, you're not in this, you shouldn't be in this alone. Knowledge is power in this situation. So how do I approach building my budget? And Gary talked a lot about this yesterday, so I'm going to go through these relatively quickly. If you have questions, just please put them in the chat. The first thing I do is determine my timeline. So this is specific to each organization. Do you need to prepare your budget and your finance committee needs to approve it? Does it need to go to the board? So what I do is I set a target date for completion, then I work backwards. So I say, when do I absolutely need to have this done? When do I need to have the budget entered into my accounting system? And then I work backwards to know when I need to start my budget. Give yourself time to do your budget. I know that's easier said than done, but you really want to allow yourself time at each step to define the process. Give yourself time to review the budget. It's always good to look at it with a fresh set of eyes, and give your time to have discussions with people internal to your organization. And then you need to understand, do you need to have this approved in advance? So again, this is really dependent on your accounting year. So for BDCC, we run 7/1 to 6/30. We're a traditional nonprofit. So I want to have my budget approved, entered into my accounting system well in advance of 7/1. So that is going to be different for each of your organizations. It also allows me to align my budget approval with any financial management improvements I'm going to make in my accounting processes. So if I'm going to change my general ledger in some way, if I'm going to go from doing things on paper to doing things electronically, I try to do it at the start of my fiscal year so it's in alignment and it jives with my budget. The second thing I do is agree on the goals. So again, you shouldn't be in this all by yourself. So the first thing I do is prioritize my program delivery goals. What that means is if you have several programs or one program or, a project that's coming up, I get those program and project managers involved at the outset. It allows me to understand what they're thinking. So I'll pick on Sarah, who runs the SVEP program. I reach out, I want to know what she's thinking, the program that she's running, what the strategic goals for that year is, so that I can make sure that the budget aligns with her thought process. We don't want to be going in different directions. I don't want to set up a budget that she can't achieve and vice versa. So we start those conversations early. We set organizational financial goals. So you need to understand, if you're preparing the budget, what is the board's financial goals? What's your executive director's financial goals? If you're for profit, the president of the company. So this could be a top-down approach. They could tell you what the goals are. It could be collaborative. Maybe you sit down with them and you come up with some assumptions and a firm understanding of how you need to budget. Or it could be based on a management recommendation. So maybe your executive director comes to you and says, go ahead and prepare the budget based on what you think the financial goals are, and then we'll tweak it from there. Regardless of if it's top-down, collaborative, or management-driven, there's somebody out there that is laying out those goals. So check in with them and make sure they have direct involvement. Clarify your annual goals from the strategic plan. So regardless of your organizational structure, for-profit, nonprofit, somewhere there's a plan for the coming year or the coming years. I mean, a lot of folks don't just do a 1-year budget, but a 3, 5, 7, or 10-year budget. You need to understand how that comes into play. The second is you need to understand your current financial status. So when you prepare a budget, I highly recommend tracking your budget to your actual results on a monthly basis. If you fall behind, it's very hard to keep track of. Fit that into your month-end closing process. If you don't understand your financial situation, you cannot budget appropriately. That's just my honest opinion. You need to understand what's going on. What's the money coming in? What's the money going out? And where are your gaps? So review your current year income and expenses compared to your budget. And I'll show you some examples of that later on. But this is where your variance analysis work is invaluable. It allows you to estimate your year-end results. So if you have your budget for July to June, and every month you're putting in your actuals versus your budget, by the time you get ready to budget for the next coming year, you're going to have a good estimate of where your actual is going to come out. That will be useful when you sit down to budget for the ensuing year. I start my budget process right after January 1st. So our budget runs 7/1 to 6/30. As of January 1, I start my budget process for the next fiscal year. That means I have a very good handle on what my 6/30 results are going to look like. So, in January of this year, I started estimating what was going to happen as of 6/30 this year, so I can report to my finance committee, my executive director, and my board. Are we going to be over budget or under budget? Is there a surprise? What's going to happen? It helps you tell a narrative. So a strong forecast to the end of the year will ensure that you understand your financial position, but it's really going to make your future budget stronger, and it will help you assess the future of your organization and those programs and projects that we'll talk about. So again, analyzing your variances on a monthly basis is really what I would recommend. So the next thing is you need to agree on a budget approach. So like I said at the outset, you really shouldn't be in this all by yourself. So assign roles and responsibilities. If you're going to build the budget, are you also going to do the variance analysis? Are you going to review the budget? Are you approving the budget? Who's doing what? Know that before you start the process. And also understand who has authority to make decisions. Is that you? Is it your executive director, the president of the company, the board? Who has that authority? And then, as I said, one of my top tips was be conservative. Agree on the unknown. So how much uncertainty is okay in your budget? You want to know that going in, because you don't want to prepare a budget that has a 3%, a 3% estimate or uncertainty in it, and your board assumes that you're going to have 5% or a break-even budget or what have you. So understand that going in. So once you've sort of set the timeline, you know what's happening, you're going to sit down and you're going to draft your income and expense budget. That could be a business budget. It could be offside program and project budgets, which you'll see in a minute, that roll up into your business budget. And it could be capital budgets. So you're going to estimate your income. What is your income that's coming in? Is it current fundraising, revenue activities? Do you have grant funding? Are you going to estimate new income? So do you have a new program that you're going to put in place, and you need to estimate the income associated with those new programs? That's going to be offset by your expenses. So what are the costs that you need to put in your budget to reach your goals and what gaps are going to exist. So, once you get your income and your expenses sort of drafted out, if your income is 200,000 and your expenses are 300,000, that's a big red flag that you need to be aware of going in. So once I've determined my timeline, I understand who's doing what, I have my draft income and expense budget set up in whatever form or tool you're going to use, and I prepared it the best that I can. Review. You want to make sure that your budget meets the overall program and organizational goals. So you're going to want to review this with the other members of your budget team. You're going to want to review the detail and your assumptions that you included. So keep good notes. And you'll see in my budget process, I actually have a whole section in my Excel spreadsheet where I put all of my notes, and it is detailed. You won't see the detail, but for instance, when I budget for fuel for the winter 21-22 period, it's the number of gallons. How much am I assuming per gallon? Why is it an increase from the previous year? Very, very detailed. Understand that when you get to the review process, you are going to need to make adjustments. I would say I just finished my budget up for fiscal year 22. I did probably 6 drafts of it from start to finish. That is outside my work for the program and the projects that we're going to have for the coming year. So you're going to have adjustments. Once people take a look at it, think about it, you're going to need to make those adjustments before you reach a final draft. And then at the very end, before I take my budget to the finance committee, I make sure that the draft that I've provided and will provide to them is going to achieve the goals and objectives that I can articulate. And we'll talk about that in a minute. And then sort of the last phase of my budget process is approve, document, and implement the budget. So who needs to review the budget? So if it's just internal, do you have a budget team? Do you have a budget committee? Do you have a finance committee? Understand that that needs to be built into that timeline. Sometimes that can take a process, quite a bit of time, because you got to pull all these people together. It's like herding cats, right? So you need to understand who needs to review that. If your budget needs board approval, you need to understand how your board wants to see the budget. Is your board a less is more? Are they a more is more? Do they want a lot of detail? So you need to understand what type of presentation you need to give to them so that they can understand it and you can anticipate the questions that they're going to ask you. When I start my budget, the first thing I do, or one of the first things I do, is create a consolidated budget spreadsheet in a file. So I'm a proponent of using Excel. I set up a fiscal year 22 budget file where everything is housed. It's my spreadsheets, it's my assumption support, it's all the emails back and forth. And the reason that I do that is because when someone asks me a question, I want to be able to go back and get the answer. So setting up either a paper file or an electronic file, whatever works best for you, think of it as an archive and a record retention tool. Keep track of your assumptions. As I mentioned earlier, keep good notes. So these assumptions will be invaluable as you move forward. So you want to know in fiscal year 21 what your budget was based on. How is that changing for fiscal year 22? This will allow you to hopefully grow into long-term planning. So maybe doing a 3-year budget or a 5-year budget or future capital projects. So keep track of those assumptions. Once your budget's done, you want to assign management responsibilities. So again, who's preparing the budget? Who is going to do your variance analyses? Who is going to do the review of that? And who checks for errors? So keep in mind, many nonprofits are one person shows, if you will. That could be you but it may not be. So just keep that in mind. Then once your budget is fully approved, you want to incorporate that somehow into your accounting system. So during yesterday's training, it looked like a lot of people use QuickBooks. QuickBooks gives you the ability to enter your budget. So then, as Gary said, you can run P&L reports that are comparisons. You can do it monthly, you can do it quarterly. It really helps you tell a good story. If you don't use QuickBooks, a lot of other accounting systems still have a mechanism for you to enter it into the system. If you don't have an accounting system, if you do it manually, you can incorporate that into your Excel spreadsheets. So just figure out a way that works best for you. And then you want to determine a system for monitoring and reporting on changes. So again, this is where variance analyses is invaluable, in my opinion. It allows you to do it hopefully monthly, which would be my recommendation, but at least quarterly, and it allows you to understand the financial position of the organization. So this brings you full circle to what I was just talking about as far as the process is concerned. I'm going to pause there for a minute just to see if there's any questions.
Bobbi, I have a question.
Absolutely.
Could you describe variances, what specifically you mean, a little bit, in a little bit more detail?
Sure. I'm actually going to show that in just a
Okay.
minute, which might help just visually. But basically, when I say a variance analysis, by line item, I take my budget that has been approved. So let's use July. So for July, when I close the books, I will then take the actual results by line item and I compare it to my budget. So if I'm budgeting for office expenses, and in the month of July, I said in my budget, I was going to spend $1,000 on office expenses, and the actual is $10,000, I'm going to say, holy cow, what happened there? And then I can go back and figure out what did I just make a fat finger mistake? Did somebody go out and decide to go rogue and buy a whole bunch of expensive office supplies that I wasn't aware about? It allows me to go back internal to my organization and ask questions. And I'll show you some examples of that.
Wait, sorry, Bobbi, another follow-up question. So
Yes.
Are you doing a monthly budget then? And then, also, if you have seasonality in your expense, you're also reviewing that. I mean, if you have propane, for instance, you're buying propane for heating.
Yes.
You know when that happens. So, or you set up a an account where you pay monthly is better. But
I do. So I do a calendarized budget. Calendarized, I'm not even sure that's an actual term, but it's my term. So when I budget July through June by month based on the information I have. So if it's office supplies, it could fluctuate. If I know in December, we're going to buy, a big amount, we have a big program coming up, so we need to buy a lot of paper. I forecast that in my budget. If it is seasonality driven, then I do budget for that. So we have a lot of real estate here at BDCC. So plowing is a great example of that. Hopefully I don't have to budget for plowing in September and October, but I do start planning for it in November through March, and hopefully not in June, but we are in Vermont, so keep that in mind. So yes, I do that as well. That's where your notes and assumptions come into play, right? So, think of it as when you sit down and you look at a line item, make your notes, and then from your notes, build your budget. So use the alpha approach to feed the qualitative approach is the way I look at it. Okay. So again, I just wanted to pass on, you've got your budget down, you've been doing it for a few years, you know what the process is. What are and you have some tips for yourself, and you say, you know what, I've been doing this for a few years. How can I make my budget process better? How can I make my financial budget better? And that's sort of where I am in my process now. And I wanted to just sort of pass that along. So the first thing I would recommend is aligning your strategic process, be it on an annual basis or a multi-year basis. So BDCC its SEDS is its strategic objective document. So from that, which is a 5-year process, we then plan what are our programs going to be, our projects going to be, and then how does that align with our budget process. So the three of those are very much integrated with each other. So when we plan out a program, we say to ourselves, okay, we want to do this program. Does it meet the objectives of the SEDS that we have in place? That is our guiding document. So aligning that together, and that's going to look different for each of your organizations. Maybe it's an annual strategic planning process that drives your overall business planning, which drives your budget. So it's going to be different for your organizations. Keep in mind that short-term decisions have long-term effects. So what I mean by that is if you decide you had a great year, you're flush, and you're going to give all your employees a 5% raise, and it's going to increase your base payroll line, that's great and really nice of you to do that. But what happens next year or the following year when maybe you don't have a year that you're quite as flush with cash? Keep that in mind. So if you make a decision now, do you have to take it back next year? Think of your budget as a living, breathing, and guiding document. It's not static. It's going to change from one year to the next. So you are going to build your budget based on some historical information, but also be a visionary and build that budget going forward so that it aligns with that strategic process, that planning process, and how it impacts the overall budget process. Your budget should have a narrative. So, we all know 1 + 1 = 2, and the budget needs to equal, and there's gaps, that sort of thing. But use that to tell your story. So, when you meet with Jennifer Stromston later, and she prepares our BDCC's annual report, she comes to me and asks me for a lot of financial information. We then take that quantitative information to build our narrative. How did our programs do? What impact did we make? What are all the good things that happen and what are the things that didn't work? So it is very much integrated between the two. So a budget has a quantitative and a qualitative aspect to it. Involve your staff. I said before a couple of times now, you're not in this alone. Keep everyone in the loop. I want everyone at BDCC to know what our budget is for the year. I don't want it to be a secret because I want them to tell me if there's a surprise or something that I wasn't aware of. So keep them in the loop. Budgeting is an art and a science. I said at the outset, have fun with it. A lot of folks say, oh my goodness, I have to do a budget and it's weighing on them. Have fun with it and keep in mind that you need to use the right and left sections of your brain to be able to build this. So it is numbers, 1 + 1 = 2, but you need to put some thought into it and you need to be creative because if you're doing your budget and there's a gap, you need to know how you're going to close that gap. All right, so let's look at some examples here. And I'm happy to share any of these spreadsheets with folks. You'll see my email later on. What I wanted to do is walk through some modeling to give you some ideas on how to set up budgets. So this is a basic nonprofit business budget. And you'll see I set it up like a P&L. So on the left-hand side is your statement of income and expenditures. You have your income at the top, your expenses down below. In this case, one year they had a net income, and then one year they had a deficit. So how are we going to close that deficit? I always compare my proposed budget to my previous budget to see where the variances are. And you'll see on the right-hand side is where I do my calendarization. So you can see here, as Gary asked the question, some months are 0 and some months have numbers plugged in there. That's based on my understanding of how this budget is going to work. And then down below, this is a pretty straightforward budget. I put some other notes and so those types of things. So on the income side, I build it based on what I know. And on the expense side, I take the same approach. This will change once I prepare it, and then it is reviewed by others. So this is just an example of how I set this up. Then I wanted to show you some examples of program budgets that then roll up into my my business budget. And we're going to try something new here. So let's hope it works. Okay. Can you see, this is the BDCC budget template here. So this may look a little overwhelming, but what I wanted to show you here is sort of the way I set it up. So on the left-hand side, all of this mirrors. Sarah, can you see when I use my cursor here?
Yes.
Okay, great.
If you, I don't know, Bobbi, if you, because the writing is really small, I don't know if that's important, but if there's a way to zoom in.
Oh, you're testing me here. I tested that with, let me see. Is that better?
Not really. If you do Control plus, that might make your, yeah, there you go.
That better?
Yep.
Okay. So the way that I've set this up is this mirrors identical. It's identical to my general ledger. So yesterday when Gary was talking about GL account numbers, all of these numbers that you're seeing here are set up identical to the way I have it in my general ledger. The same with the title of the general ledger accounts. So you'll see we have business park revenue, cotton mill revenue, exit 1 industrial park. Then we have our grant income. So all of our programs are funded primarily by either private foundation, state, or federal grants. So I budget for each of these. You can see how many we have here individually. And then when I have that information, I roll it up into this budget. So I do a business budget and I do a program budget for every single one of these. And then of course we have other income sections as well. My expenses align identical with my income expenses above. So we have corporate expenses, which is everything to run the business. We have expenses that are only for the business park real estate property. So each of these line items, the takeaway from this is setting it up like your general ledger, budgeting by line item on a calendarized basis. And I'm going to move to the right, or at least my right, in just a minute. So you're going to see that. So doing it this way allows me to understand for the cotton mill, when I budget for pest control, what is the impact between July and June? How does that fluctuate over the year? Is it higher in some months, lower in some months? And it allows me to make educated decisions on potential cost savings and impact to cash flow. Down here, you'll see in this orange color, this is where I've highlighted all the different programs. So these are the expenses for each program where the income was shown up above. So when I did the budget for the cooperative internship program, it aligns with the grant budget, which is what we have reported out to our funders. So the reason that I set it up this way, if you are a nonprofit and you have programs that are funded by state or federal entities, I want to be able to tell them exactly how I'm spending that money. And I want to be able to tell them the good news and the bad news. And I want to be able to take that and give them a narrative as to how that program is performing. So that's really where it comes. Doing those program budgets is important here. And we're going to talk about that more in a minute. So that's sort of the way I approach the budget, and then how I track it through the year. And I've given you examples. This spreadsheet is extremely large, so I culled it down as best I could. I always compare my, in this case, fiscal year 21 budget to my fiscal year 20 annual budget. So I build that budget in, and then from there, I'm able to forecast out into my fiscal year 20 outcome. How is fiscal year 20 going to compare to fiscal year 20 budget? Am I over? Am I under? And it allows me to tell that story to my board. What I never want to do is surprise them. So I always want them to know the good, bad, and the ugly. And this allows me to do that. Then I start my budgeting process. So I have my budget from the previous year, I have my estimate for the year, and I'm going to start my budget for the ensuing year. Again, I do it calendarized. So you can see I start here with July of 20, go through June of 21. For every line item, I do a separate budget. That gives me a total budget, and then it allows me to do some variance analyses. So I always want to tell the people that I report to, how is the fiscal year 20, in this case, budget different than the fiscal year 21 budget? And how is the fiscal year 21 budget different than the actual outcome from fiscal year 20? My board likes that level of detail. I don't give them this spreadsheet, I roll it up for them, but they want to see by sort of program how it's going to be different. And then you'll see I have a whole section over here. It's quite a bit larger than this for my notes and assumptions. So for every one of these line items that I'm showing you here, for base rent BP, I have assumptions built in. So I can tell anyone who asks me how I came up with these figures from July to June. Okay. Now we're going to see if we can close this, since Sarah had me make it larger.
If you do control minus the button next to it, yeah, that should make it back to regular size.
It is not.
Oh.
Well, you know, it's Zoom. Somebody has to have this happen every time, right?
Gary's asking, do you create reports using your spreadsheet or use native reports from accounting software?
So it's not letting me shut this. So what I do is I create my reports out of QuickBooks. We actually use QuickBooks. I then from there dump it into, so I download it into Excel, and then I dump it into this detailed spreadsheet here. The reason I do that is because I can't build my assumptions into QuickBooks. So I like to have it in one location. So it is a little bit of a manual process, but it doesn't take very long to do that.
Thanks, Bobbi.
You're welcome. Okay, I'm back. I don't know what I did, but here I am. Then I wanted to show you an example, thanks to the Maine Association of Nonprofits. They actually have some good tools for you there. But I wanted to show you something that's not quite as robust as what I prepare. And this is more straightforward. If you don't have a lot of programs, or you have more of a, opened over here. Okay, so hopefully you can see this here. So this is more of a straightforward, but they're doing it by line item. So yesterday when Gary was talking about aligning or your general ledger account and it having numbers, I put in the chat that it's okay if you're a smaller entity. Maybe you don't want a numbering process, you want an alpha process. You know, that's what they're showing here. The one thing I found, as you have a lot of general ledger numbers and you make accounts inactive, you start running into problems with numbering schemes. So that was the reason for my comment yesterday on that. It may be easier for you just to use an alpha approach when building your chart of accounts. But you'll see here they have their expenses versus their revenue. It's flopped around, which is okay. And you can see that they operate with a surplus versus a deficit. So this is a more simple approach that may make sense for smaller nonprofits or even for-profit entities. Okay. Let's see if I can close this without shutting everything. Okay. All right, so let's move on to capital budgeting here. And hopefully I'm okay on time. Let me know if I'm not, Sarah.
You got about 10 minutes.
Okay, great. So we'll go quickly if we can here. So capital budgeting, this is the process that I work through to do capital budgeting. So for those that attended yesterday, Gary noted that capital projects are sort of longer term value projects as well as higher costs. So they are going to have a direct impact, be it mission impact or revenue impact. So you're going to choose to do them so that at the end of the project, it is going to benefit you in some way, be it more revenue or more mission. These are projects that extend over periods of time from a depreciation standpoint. And I won't get into all of that today, but these are generally projects that you will have the ability to depreciate over 5, 7, 10, 15, or 20 years. So they're larger cost projects that instead of expensing in the time or the year in which you incurred the expense, you're going to spread that over an extended period of time. They generally are larger expenditures, so they're capitalized, distributing those fixed costs over the useful life of the asset. So examples of these are land, real estate acquisition. You're going to buy a building to move into. That would be a fixed asset purchase. Equipment, and equipment is going to have differing levels of financial impact. So for BDCC, when we buy a piece of equipment, we consider it a capital purchase if it's over $5,000. If you're a smaller nonprofit, it could be over $500. So it's really driven by the type of organization you are, how you define a fixed asset expenditure, and what is going to be more valuable for your entity. Construction projects, if you're doing a renovation. Maintenance and repair of fixed assets is also a capital initiative. For BDCC, we have large buildings. So when we decide we're going to replace all the windows, that's a capital expenditure for us. So we budget it based on a capital project. So again, the level of capital outlay is going to be different for all types of organizations, be it for-profit, nonprofit, the size of your nonprofit. Again, for BDCC, that limit is $5,000. I was the treasurer of youth services in Brattleboro. It was $1,000. And then I've worked with other nonprofits where it's, buying a computer, a desktop computer or a laptop is a capital expenditure. So it really is defined by your organizational structure and what makes the most sense for you. So how do I go about budgeting for capital projects? So the first thing I do is I have a list of probably 100 capital projects that I'd like to do over a certain amount of time. Some of them it's a wish list. Some of it is we have to do it. We need a new roof at the cotton mill. So it really is going to depend, but I always keep a parking lot. Because we own real estate, we do a capital needs assessment. So that helps us to define our capital needs parking lot, but it's also, maybe we want to buy another building or we want to expand in some way. So having that list at the ready is important. It allows you to explore your opportunities and your needs. Expect to have a lot of options. And then from that list of 10 capital projects that you think you want to do, evaluate what makes the most financial sense and logistical sense. Once you've weeded that down, so you may have a list of 10 and you've weeded it down to 2, you're then going to estimate what the project's going to cost. and what type of internal and external research needs to go into determining how much it's going to cost. You know, if you need to go out for quotes or you need to ask questions, you need to go find funding, that's going to go into the capital budget. Then once you've identified what project you think you want to do, you know how much it's going to cost, you're going to estimate, do a cash flow for the project in question. You're going to want to know, is that project, if you do it, is it going to generate revenue or is it going to add to your mission? You need to understand that because that's going to help you make a decision if you're going to ultimately implement that. Prior to any decision on implementation is assessing your risk. So what's the risk of the project? What I mean by that is, what is the amount of money that you or your organization stands to lose if the project fails and it can't produce the expected results? You know, once that is determined, then you can evaluate that against your cash flow or the mission-driven, if you're a mission-driven entity, the benefit to make sure it makes sense to implement it. So are you okay with the risk, the probability of risk that you could incur? You've determined, yes, this project makes sense. We're going to do it. We're okay if something happens and it doesn't turn out the way we want it to, and we're going to move forward. So you're going to determine, you're going to come up with an implementation plan. How are you going to pay for the project? Does it come out of your, do you have a capital reserve that it needs to come out of? Is it coming out of your operating cash? Do you need to go find funding, borrow money for it? So you need to figure that out going in. You're going to want to, once you've determined you're going to do it, you have the funding for it, you're going to need to track the costs associated with that and the process for recording the benefits and the cash flow impacts. So keep in mind, this is a project, a capital project that you've decided to do. You have a budget, you know how you're going to get it done. How are you going to tell the story as to the benefit of this? Again, your budget has a narrative. So I've included two very high level. I won't get into the details of the numbers here. It's more to show you the structure of two different ways to approach a capital budget and assessing a capital project. The first on the left-hand side is a farm expansion. This is what I call a back of the envelope approach. So this farm decides that they want to buy a piece of equipment. They're going to buy that equipment. It's going to cost them for $10,000 to buy it. They've determined that, you know, if we buy this piece of equipment, it's going to generate $4,000 worth of income. Great. So it's going to take them 2.5 years to reap a payback period. That's a basic way to approach looking at a capital project. This doesn't include inflation and the time value of money and all of that good stuff. It just allows them to say, okay, one, we know how much it's going to cost. What happens if we don't generate the income? Are we okay with it taking longer than 2.5 years to make our money back? And how are we going to afford the purchase? It allows them to go through that process of identifying the project, how much the project costs, and working through the risks associated with it. On the right-hand side is a much more involved capital project. I won't go through this, but what this project is doing is it's saying it's going to cost us $300,000 to take on this project that involves buying real estate, equipment, and working capital. And then we're going to forecast the cash flow over a 10-year period to see if it makes sense to move forward with this. If someone wants, because we're short on time, if someone wants more information on this type of capital budget, I'm happy to talk offline about that. It's a little more involved, and we can talk about present valuing and that sort of thing. Okay. So let's move on to program and project budgeting. I've linked these together. I talked at the outset how I see them a little bit different. But really what a program or project budget is it's a way for you to specifically plan for a program or a project. The advantages are it helps you determine priorities. It allows you to plan and manage the delivery of future services. It helps you spot gaps And it also monitors allocation of resources, areas for you to identify cost reduction, and it really gives your organization accountability. So again, if you are reporting to a funder, it allows you to explain to them how you're using the funds, or if you're applying to a funder, it allows you to explain why you need the money. Some disadvantages, if your program or project budget is incorrect, that could have implications to you. If you assumed you were going to break even and you're over budget, how do you deal with that? It takes a lot of time to do these program and project budgets and then roll them up into your organizational budget. So, certainly that is something to keep in mind. They can continually change and they can have cross-year impacts. So what I mean by that is if you have a program that is funded by a federal grant and your budget is 7/1 to 6/30, but your federal grant runs January to December, you're going to have to keep that in mind as you budget for that. Okay. So here's an example of a program budget that has multiple funding sources here. Can you see that, Sarah? Okay. Okay, great. So you'll see up at the top, I've identified, this happens to be our P3 program. All of these here are the funding sources. So you can see it goes from Vermont Training Grant all the way down to employer number 3. And I have to budget for each of those differently in this program budget. So I've set up my spreadsheet to do that as well. So each of these funding sources is set up based on the grant agreement that we have in place. So in the case of the McClure Foundation, they funded us for personnel, marketing, communications, materials, and transportation supplies. So I've built my budget to reflect that. I also use this spreadsheet this happens to be a multi-year program, so it's a 5-year program. In the case of nonprofits that have grants, most of those are probably cost reimbursement grant. This is also where I capture exactly how I'm spending the money. So I can report out to John at USDA exactly how I've used his funds to fund some of these programs that we have. And I use that for my program reporting. I can tell you how I spent the money and any remaining balances here. So again, the key takeaway is that this is the place for me to have all of the information. I don't have it in different spreadsheets all over the place. It's all housed together. And then again, thank you to the New Jersey Grant Makers Association. They actually have some good tools for you as well. So they have some sample budgets that you could use when you're applying for funding or you want to track your own programs. You'll see here, they break it down very detailed, and they also have a couple of different samples. So that's another resource for you to reach out. Instead of making your own models, there's nothing wrong with piggybacking off from someone else's. And then I do have an example. I won't spend a lot of time on this since I'm going over here, but this is a very large, this was a renovation expansion project. This was a $22 million project that ran for 26 months. So it was over a 2-year project. It had a construction phase associated with it. So, I treat this very differently. I don't see this any different than it has more lines because it's a $20 million project, but I don't see it as any different than a regular program budget. You're still going to keep track of your uses, how you're spending the money, the reallocation, and we didn't talk about that, but most of my budgets, I build in a reallocation column. It allows me the ability to move between line items. So if you're a nonprofit that your grant funder allows you the ability to move within line items up to a certain percentage, I keep track of that because I want to be able to tell them if I spent the money in a different way. So I'll just close this out with a plug for policies and procedures. I'm a policy and procedure person. We've talked a lot about how you approach building a budget, what you need in a budget, who's involved in a budget. Write it down. This is a great way to share tribal knowledge. So if you win the lottery and you decide you're going to move on to bigger and better things, the person coming in behind you, it's a really good way for them to understand how you approach budgeting and how the organization approach budgeting. It doesn't need to be a 20-page document. It can be a one-pager, and it can be part of your financial management policies and procedures. Again, if you don't have those, I would highly recommend you write that down as well. It's a great way for you to understand how your organization works financially. It's a guideline for future planning. How do you express your financial terms within a set period? And then I gave you sort of an outline here. My policies and procedures always have a purpose statement. Why do you need them? How does it apply to your organization? Who's involved? Who does what? And who's accountable? Who makes the decisions? Who does the work? How is your board involved? If you're a for-profit, maybe the president of the organization, what do they need to know? And then who does what internally? Who builds the budget? Who does your variance analyses? All those administration type things. How does it get entered into your accounting system? What resources are available to you? Who are the program managers? It's just a great place to store all of this information. And then what's the approval and review process? So, again, writing it down just captures that, and it helps to share with people that are coming in after you. So with that, I rushed a little bit through the end here, but I am certainly available as a resource anytime. I'm happy to help. My email is here, my phone. Chris Plante is not on the call here today, or the Zoom here today, but my plug to her, she helps me with all of these slides because she loves to do that. So happy to answer any questions either now or offline.
Thanks, Bobbi. Are there any questions for Bobbi before we move on to the getting more money portion of this? And you can feel free to unmute yourself if you have a question.
Hey, Sarah, this is Max at USDA. I just can't say enough about Bobbi's skill set and talent. Over my 32-year career, she was probably the best grants manager that I've experienced. So her materials, stop looking for anything more. She's provided you a comprehensive program that every time I see it, I'm impressed. So I just want to double down on the fact that unsolicited, comment of her work and her quality of her work, and just steal everything you can from her.
Thank you, Max.
Lynn has a question. At what point do you make entries into the balance sheet for fund balances?
So for us, that doesn't apply here at BDCC. But I would assume that would align with whatever your fiscal year is.
Gary's shaking his head yes too.
Yeah.
All right, awesome.
Go
ahead. Go ahead, Dwayne.
Hi. I have a little bit different kind of organizational question.
Yeah.
Bobbi, it sounds like I'm sort of reading between the lines here. It sounds like parts of your year are much busier than others. And I'm just wondering about how you budget your own personal time and resources. If you, I'm assuming that like the second half of the year, you're much more involved in reviewing the previous year's details and creating a budget. And so how do you manage your own time and resources so that you're super busy in a few months and then have a lot of spare time in the other months?
Well, I see Jen Stromson on this Zoom, and Jen comes to see me almost every day to ask me to budget for something that she is going after. So certainly from a program perspective, we budget all year long because we do our grant requisitions on a monthly basis. So we are always looking at our programs and what we've spent and how we've, what we have remaining. I never want to get to the end of a grant and say, oh my goodness, we have funds that either we can't use effectively or efficiently. So that happens all year long. I am getting ready to start my fiscal year, I just finished my fiscal year 22 budget, and I'm going to start my fiscal year 23 budget. So I don't know if that answers your question, Dwayne, but I'm doing budgeting all year long. It never stops. And I also report, just as an aside, I report to my finance committee and my board every quarter. So I report out as part of my month-end process to the executive director monthly, and then I take it to the finance and the board on a quarterly basis. And that aligns with the reporting that we do for most of our grants as well, that John was talking about. So it's a nice feeder for that process. So I don't know if that answers your question or not, Dwayne. I feel like I do it all the time.
Great. Any last questions for Bobbi before we switch gears here? And I did put her email into the chat, so you can definitely reach out directly if you have some more specific questions. And Bobbi will share the PowerPoint. I can send that out.
Yes, please. The links go to a Dropbox, so if you have problems accessing it, just shoot me an email and I'm happy to send you over the models.
Great. Wonderful. All right, well, we are going to switch gears here, and bear with me as I spotlight some people. I am going to introduce Jen Stromson. She is our Director of Programs at BDCC, and she is going to facilitate this next session with our esteemed guests. We have Katie Buckley, who is newly with the Vermont League of Cities and Towns, John Michael Muse, or Max, with USDA Rural Development, and then we have Kevin Weiberg, who is with the Vermont Community Foundation. So I'm going to hand it over to Jen. And again, if you have questions throughout this chat, please put it into the chat and we can sort of serve it up to our speakers when appropriate.
Thank you, Sarah. I want to treat this time as a little think tank session because these are three people whose opinions I really respect when it comes to not just thinking about like specific funding asks, but really thinking more holistically about how to invest in organizations and invest in communities and to really get projects done that kind of get at the spirit of what is trying to get done. Because a lot of times when we're doing fundraising and grant writing, we end up having to tailor our messaging or even our program to kind of what funders are, what's available, right? What's being asked for, what can happen. But that's just the reality of it. And I think, we all strive to not let that tail wag the dog. But I know that we've had a very technical conversation over the last couple of days, but I want to sort of like pull this conversation back out a little bit. Not at first, I'm going to ask you guys some specific questions, but so I want to treat this a little bit like a little think tank, and I have a bunch of questions, but I'm totally happy if this becomes a runaway train. You guys just take over, so feel free. So first, I just want to go around and ask you to introduce yourselves and sort of tell people a little bit about your expertise, so they kind of understand the depth of your perspective and your work. So I'll start with Max.
Thank you, Jennifer. So John Michael Muse, also known as Max. I work with USDA Rural Development, which is a federal agency. Our jurisdiction's Vermont, New Hampshire. Our mission is to increase economic opportunity and improve the quality of life for rural America. We do that through financing mechanisms. As far as my experience, as I mentioned, I've worked with USDA for 32 years now. It has changed over the years. That's why I have such longevity. Otherwise, I'd probably be poking sticks in my eyes at this point in my career. And it's a really dynamic, great organization. My background is resource economics. So I get the fact of, supply and demand and economies and how they function. And we have a lot of programs that we can bring to the table. Over my career, I've worked in most every single one of our program areas. So I think that assists me in really navigating a conversation with a community and all the aspects of their needs and what they want. So I can flip through my Rolodex in my head and say, well, it doesn't fit this program, might fit that, another program. And then partnerships, right? We create partnerships with like Kevin and Katie and BDCC because it's a team effort on funding and financing projects. I've also been a small business development center counselor as well as a small business owner. And I think that entrepreneurial bug that I have in my gut really helps view projects in a different way than just transactional, but transformational. So I'll turn it over back to you, Jen.
Great, thank you so much. All right, Kevin.
Hey everyone, I'm Kevin Weiberg. I'm a philanthropic advisor with the Vermont Community Foundation. We partner with BDCC a number of times and a lot of their work, and we're just excited, and I'm excited to be here. We are a public charity with a geographic identity, which is the state of Vermont. Our current mission is better together, inspiring giving, and bringing together people and resources to make a difference in Vermont. And that's what it's really all about. And one of our one of our most motivating factors is that we're here to help Vermont philanthropists find and fund the causes that they love. And each of you represent something very important to one of those fund holders. We have over 700 fund holders and 800 different funds. I'm on the grants and community investments team. So if you're writing a grant proposal, there's a high likelihood I'll be reviewing it and evaluating it and making recommendations about it. In a typical year, we have $1 million to do for discretionary grant making. That's pretty much what we have to help all the nonprofits around the state. The rest of the money that comes through the VCF comes directly through a direct connection from our donors and our fund holders, directing us to whom they would like to make those gifts. So more than $22 million passes through the foundation, specifically guided by our fund holders. I won't go into a lot of detail because I want to get into the conversation, but I want to add on to a little bit of Bobbi's presentation because Bobbi was fabulous. And I used to teach for the Grantsmanship Center, and I also on nonprofit grant development and competing for federal funding. And one of the things that always trips people up is that their budget doesn't reflect their work plan, or their work plan doesn't reflect their budget. So I like to tell people, I should be able to read the budget portion of your grant proposal and know exactly what you're proposing to do. So just remember that those two things are very clearly aligned and need to be linked together. Thank you.
That is a great way of framing it. Thank you. Katie.
Hi, everybody. I am happy to be here this morning. I'm Katie Buckley. I am the new Director of ARPA Assistance and Coordination for the Vermont League of Cities and Towns. I come from a background of, it's kind of a Jane of all trades, I guess you could say. I have municipal administration experience, so all that municipal budgeting piece I've been part of grassroots development projects that are funded by any and all grants that you could possibly think of to fund a project, and donor gifts as well. I am a former state official, so I know what it's like to be on the funder side of it and seeing those applications coming in. And I'm delighted to now be circling back to be with Vermont towns, cities, and villages again, and helping give them guidance around their ARPA allocations that are right there waiting for them, which for a lot of municipalities in the state of Vermont is going to be a pretty daunting decision to make. Do I take this money that has this long list of very intimidating terms and conditions, or do I just say, oh, maybe not now? But if you decide maybe not now, then it's not ever, because you'll lose it. So it's a use-or-lose situation here, and we're encouraging all towns to take their money. But it also presents a unique opportunity for the state in that towns can do projects or think about doing projects in a way they never would have before. So very exciting moment. And I'm really happy to be here. And I love the think tank. That's my favorite way to be, is in unscripted, just good, smart dialogue. So how does that go? Thanks, Jen.
Well, I wish we could have more of this, and I can't wait till we do this in person. This is, kind of, we're working on how to do things hybrid so that we can continue to have the accessibility, especially for folks, for where the driving is just always burdensome. Yeah, thank you. So we're gonna get back to that COVID question in a moment, because that I think we're at a special moment in time, and I don't want to lose that thread. I just want to do sort of a highlights question. And these are things that I've heard you all kind of speak to in different ways in the past. What are just some things that you wish, kind of from that funder perspective, what are some things that you wish volunteers, board members, grant writers really understood better when it comes to both budgeting and grant writing? And, that's, for instance, what Kevin just said, great example of that, but also things about like relationships with funders, just sort of, top 2 or 3 things that folks need to just keep in mind. And I'll stick with the order for now. So Max.
Thanks, Jen. I think what I've observed over the years is that processes may appear very daunting and complicated. And I think it's very important for any organization to break it down. You don't eat an elephant all at once. You break it down to one piece at a time. I think, knowing that they can get through the process, if they don't have the expertise, knowing that they should find the expertise to help them, get the consultants, the BDCCs of the world to be able to navigate the process, and to talk to people early. I don't know how many missed opportunities there are because someone has a timeline of 3 weeks, and as a federal agency, we're not fast, and we have different timelines. So I think, that's probably key. And then planning, going through the process. I think as we're going to hear from Katie and others about some immediate opportunities there, if you're not poised to be able to engage funding sources, then you're going to miss out. And that planning is always a good fundamental thing.
That's great. Thank you. Kevin.
I think I wish more nonprofits would understand that it's really okay to call us. We're here to answer questions. We would much rather have a conversation with you and talk you through why your idea may not be a good fit versus you submitting an idea and then we have to decline it because it didn't fit what we were looking for. So please feel free to reach out. We have philanthropic advisors that serve the state, and you are very lucky in that you have all of them are above average, but Elizabeth Marks is amazing. So she is your philanthropic advisor, your representative to the Community Foundation. Her job is to be out there getting to know all about you. She's looking for you to get information to her about what's going on in the community. And sometimes there's an opportunity to make a connection with a fund holder. It's not Elizabeth's job to shop your idea around. It's your job to keep her informed on what's going on. And then she's constantly thinking about, who could help support this? Who might be really interested in this program for young women in STEM, for example. So relationships, reach out, relationships. And then I will say this caught me a little bit by surprise this couple of weeks ago, but I had a couple of very, very experienced nonprofits really mess up on a deadline and even on the proposal instructions. So don't wait till the last minute to submit something. And you really need to find the instructions of the proposal. You really need to pull together a team for group thinking. You need financial expertise at the table, program expertise at the table, ideally lived experience at the table to help you design your programs for your grant proposals. So those would be my 2. Reach out, don't wait.
Great, thank you. And Katie.
That's the hardest thing about going last after 2 really smart people.
You can I'll let you go first next time. You're right.
No, that's okay. No.
Right.
So I'm going to repeat a lot of what you said, so my apologies for that. But figure out who has done your project before and has done it successfully and call them. And then, as Bobbi said, you can take whatever you want. If they'll give it to you, take it and use it. That way you don't have to reinvent the wheel. Planning and patience, as Max said, really taking that time to put together a good plan, take that deep breath, and be patient so that when you do put your plan together, it's the right plan and you're not scrambling to go back and make changes to it. And as Kevin said, read the language. So often when reviewing funding applications, I would read the narratives and they don't actually match what the question was asking. So while there's a lot of words there, it doesn't tell the funder what they want to know as it relates to that particular question in the grant application. So really taking that time and reading through the questions, reading through them again, and don't speed read through them, each word, because you might pick up something, oh, that's the point I need to make. Stay true to your project. Don't let funding source create scope creep into your project just to get money, because you'll suddenly end up with a project that is much bigger than you ever intended and doesn't really meet the ultimate mission of what you're trying to do in your project. So that's my little couple granules I can add that rounds out these two fine gents.
Thank you. I you probably hear me typing. I'm taking notes. Sorry. So I always do when you guys talk. I want to pivot towards, we only have about 20-ish minutes left, and I promise not to let this go super long as I have in the past, because I always love this part. But I do want to kind of have you guys freestyle it again, but I'm going to let Katie kick this off because I really want to talk about that, because that COVID specific advice, and I'm just going to, I want us to, some of that has to do with the time frame, right? Like everyone's sort of like, but actually there's time to figure this out, right? This is not all like rush money. I think we need to understand, we've been thinking about it a lot about as far as the town money that's flowing down through ARPA, but I think Max, you can really speak to how this is filtering down through federal agencies, and then not just relief money, but what's happening in rural policies changing. So and then I think from the private foundation, the private funding perspective, Kevin, I think maybe you can speak to just sort of yeah, COVID, but just general trends. And so I think what I'm asking is for you all to really just kind of weigh in on the future and how, it's we can say plan and take the time to do that. But what do folks need to have in mind as we're planning? What are the new opportunities? What are the emerging kind of trends in philanthropy and funding? And, where are we going? Because I really don't feel I pay attention to this all the time and I don't know. So anything you have to say on this, I'm going to take a lot of notes again. Katie, you get to start.
Sure, you bet. So there's ARPA money flowing into the state through a whole variety of channels. And so where I'm with the league, I am most concerned obviously about all of our Vermont municipalities. And so what I'm telling them is, you do want your money. Don't turn it away. Take it. The deadline to accept it is July 15th. You need to go into the portal by July 15th to claim your money. If you do not, you lose it. If you decide that you just can't seem to put a project together, you can transfer it to someone else that you decide. If you reject it and it goes back to the state, it gets reallocated out. You have no say over that money anymore. After you do that, you have 3 years to decide what your project is. And the best thing to do is look at where all that other ARPA money is and spend other people's money first. Have your ARPA money, sort of protect that as your reserve and bring it to the project as the sort of last money in, if you can do that. But on the flip side of that, there are so many ways to spend this money that don't limit yourself to just doing the easy way, because you are at an opportunity moment you might never, ever have again for another generation. You won't see it. So if you are thinking about that creative project, if you are thinking about doing a small wastewater system in your village to put in middle income houses for people to buy that they can afford, but the sewer system is holding it up, do that. do that project, figure it out. There's lots of money out there to do it, and there's lots of technical expertise. Max can certainly come to the conversation. Maybe Kevin even could come to the conversation, depending upon who the audience serve will be. Don't let fear limit your creativity at this great moment. Do great work. You have the opportunity to do it. So that's my little soapbox pitch there for funding.
Love it.
Well, I'm glad you're keeping track of it, Kate, because I've spent the last 4 months plus trying to track ARPA funding throughout the state of Vermont in so many different sectors, from broadband. I never thought I'd be a broadband expert, but mental health and all these other things. This money is going everywhere, and that worries me a little bit, in that it's not going to be used as strategically as possible. But as Kate said, don't wait. Get in there and get that money, secure it now. A couple things I would say is that there has been a lot of ARPA money, but I also wanted to let you know that the private philanthropists of Vermont really stood up this past year or so. And I think our COVID response and recovery fund has grown almost to $9-point-something million. Now, when I told you we give out $1 million, that takes a lot of staff time. Well, imagine going from 1 million to 9 million. So these bags under my eyes are kind of there for a reason. But we have been working hard to get this money out to communities in a number of ways, from basic human needs all the way to community and economic vitality and welcoming and equitable anti-racist communities. So in terms of how private sector funding sort of connects or works, is that we don't want to fund stuff that's going to be funded through ARPA. We want to help supplement federal funding. We don't want to supplant it. Because if there's government money out there, that needs to come first, and then private philanthropy can come in behind. We can sometimes be a matching source for your grant a proposal, but we again just be really mindful that we don't want to be doing what ARPA could be doing. I will say that foundations like ours we're a lot more flexible. We can have those conversations. We can talk about deadlines if something's going wrong for you. And you don't find that, I would say, in a lot of state or federal grant processes. You have to meet the deadline. You have to do everything right. No chance to come back and explain what you did. And that's different at least that's different with the Vermont Community Foundation. If we're reading proposal and we have questions about it, we'll write down those questions and we'll send you an email saying, we'd love some more information on these questions. So know that when you're working with state, federal stuff, it's a really tight process, but when you work with philanthropy, we're committed to best practices, but we also want to be flexible so that we can help you whenever you need us to be there. I don't know if that answered all of it, but.
That's great. Don't worry, there's going to be more. I'm going to come at this from a couple different directions.
Okay.
Thanks, Kevin. Thanks, Katie. Yeah, so Jen, your question's really intriguing, right? The future, what's going on, the ARPA money, things like that. My observation of the world is that federal programs are intermediate and long-term programs for investment. So I think ARPA money, I take a different tact. I think it's more like cash right now that can be accessed, and that might be for some projects really important if there's timeliness to them, that they need to get going faster, right? And then for intermediate and longer term projects, you have entities like USDA Rural Development, and there's many others there. So the other thing that goes along that we need to keep our eyes on is that Congress is looking to pass a budget this year with some more stimulus dollars. I'm really observing unprecedented amounts of capital that's going to be available for a lot of different things. My agency is going to get in certain program areas additional funding, and so on a lot of other federal agencies. That doesn't mean our rules change, and that's a problem. So we have more money to put out the door with the same amount of criteria and the inflexibility in some cases. So I think the ARPA money is Katie, thank God you're on board. I remember talking to Ted about hiring you, and you're going to be probably a very busy person with helping people navigate that. Thank goodness. The other thing is your local representatives. You know, the states have used stimulus money or the ARPA money very differently. You know, New Hampshire, the governor controlled it. In Vermont, the legislators took it over. So, you know, very different ways that money is flowing in different states. You know, we're also experiencing unprecedented low interest rates. That cannot last forever. I think if you have a project that is a worthy project, you're debating on when to do it. You know, with the interest rate environment, you want to look at it now because they never get cheaper. You know, I got to tell you, you know, and we're seeing some inflationary activity around some construction and lumber materials. That will wane. But interest rates, especially for like our programs, are all-time lows. And, you know, some benefits of funding from us is that we can actually obligate funds, set them aside and hold that interest rate until the project's complete. And when the project's complete, we take out the interfinancing. And if the interest rate's lower at the time, we can honor that. But at least you're locked in for the period of time that you're constructing, like, you know, Katie had indicated, you know, water and sewer infrastructure, not very sexy subject, critical to development of a community. If we lock in an interest rate at 1 to 2%, you build out the project for 2 years, you've got that interest rate in the future. And during the build out time, you can also raise funds and lower your obligation. It's when the loan closes, that's when you're stuck with the dollar amount there. So we got some really good flexibility there. One issue that we're observing is capacity. And again, back to Katie, thank God they have her. A lot of these volunteer boards and communities just don't have the staff that can engage it, understand it, along with, you know, all the other things they're doing there. So again, that's going to be a critical problem. And never mind the workforce that's non-existent out there. You can have all this money sitting on the table, but if you can't get a contractor to come build your facility, that money is a lost opportunity. So that's going to be a challenge going forward. And that's been a challenge forever, but this will exacerbate it, having all this more money to put out the door. The other vision that I have is, you know, regional projects working together. I mean, that's really key with funding such as this. You know, Vermont is amazing at working together and amazing of all the resources that can be brought to the table. We need to work together better. Not every town can have a community center. You know, it just sometimes doesn't work that way. Are there regional water and sewer systems that can occur? It might be a little more money to run a pipe down the road, but, you know, have your own. They're very, very, very expensive projects. And then I think, you know, just continue with strategic funding discussions. If you have a project and you know that myself and Kevin, maybe some ARPA money, maybe there's Vermont Community Development Program money, Preservation Trust of Vermont money. Instead of telling your story 6 times, tell it once to 6 people. It's going to help you out as far as being in. And then we get along really well in Vermont. So we're going to sit there and go, hey, I think this is better in Kevin's spot and rural development should take this piece of it. You take that, and can we share the environmental? Can we do the different things? I think strategic funding is definitely something to consider as well. Thanks.
And can I just add to that, Max, in saying that when you get those people around the table, then you have those very influential people who have your story, who then go out and help you tell your story, so that maybe the 6 people are 7, 8, and 9 that weren't at the table that all of a sudden come to the table. So it's a great way. That's an excellent point. Excellent.
And I say all the time, Kate, I love to spend other people's money. So.
Me too.
Me too. I just want to add a little bit because I misread the question. Some of the things that we're looking at going forward have been very much influenced by our experience around COVID. One is about diversity, equity, inclusion. Did a lot of research to look at health disparities among Vermonters, not just nationally, but it's happening here in Vermont, about people of color and BIPOC Vermonters. So that's really a theme that you're going to be seeing more from the Community Foundation. We're always about community engagement, but we're really we want to see community engagement that's getting Vermonters back out into their communities. So we're supporting a lot of things, strategies for communities to use art to reconnect and redefine their places. And so I would say those are some of the things that we'll be working on. We're continuing with college and career training pathways. And rural entrepreneurship is always going to be on our radar. So
Just a note,
that's my
too, I put in the chat a link to Gov Delivery. That's another thing for knowing timelines of when money comes available, right? I think that's a passive way to understand when rural development's pushing money out the door. And if you sign up for that in that link, you're going to get automatic notifications when money comes available, and you don't have to worry about when does that happen, when did it happen, things like that.
And use your Outlook calendar strategically. I would say that you can go to the Community Foundation, look at deadlines for this year's grant rounds, and they're not going to change dramatically next year. So things to put little flags in your emails to say, "Ooh, check the foundation's website for their new Spark Connecting Community program," that sort of thing, and also including all of the other funds that are represented around the table.
Great, thank you. I would happily go down the capacity rabbit hole all day long, because I think that that is such a pinch point, and I some of the frustrations right now are there's all this opportunity, and there just aren't enough organizations that are in a position to step into that space. That is the whole purpose of this program. That's why Sarah puts on these series. That is really what it's about, is making sure that in the organizations that we have, that they can be building the skills and things like that. And that's something that, we continue to focus on in a variety of other ways. Not the least of which is Bobbi providing a lot of just one-on-one help when people call her. So, but I think I want to end on this question, which is the sort of, what if you had $1 million question? And I want to frame it sort of as, what if you had $10 million, first of all? And I want you to think in terms of, what would you like to both see funded more, but also what would you like to see, asked for? What do you wish people were asking you for? Kevin, you're going to start on this one.
So wait, I'm asking for money, or I'm giving it away?
You're giving it away. What do you wish people were asking you to give it to?
Oh gosh.
Yeah.
I would say more stronger collaborations. Vermont is too small for nonprofits to be running around trying to do everything on their own, which is a real challenge to our funding strategy at the moment. Our grants are not large. They are $3,000, $5,000, sometimes $25,000, and occasionally $60,000. But those are not big grants. So our grants are there to sort of inspire, seed, leverage other resources. But we fund a lot of small programs, and we're a very small state. Would love to see more right now, because it's something I'm working on pretty closely, is around mental health and suicide prevention. That's a big initiative that we're looking at. I would just love to see more things that involve youth and youth leadership. I would say those are probably really, really key points for us. We have something called the Southshire Fund for Bennington Youth, which is one of just a couple of regional-based funds that we have now, the other being the Northeast Kingdom Fund. And these are funds within the VCF that are really looking at very particular parts of the state. Not only is that an opportunity for, it's an opportunity for us actually to bring in more philanthropists. There are a lot of philanthropists that are interested in the Northeast Kingdom. We started a Northeast Kingdom Fund. They helped seed the fund. And now we're doing annual grant making. So would love to see more regional responses to things. And yeah, I'm just going to go back to youth and diversity, equity, and inclusion. I know down your way, it's much more diverse than where I am in Huntington. So there's a lot of opportunities to really engage everyone in the community to help them understand how they all belong and lift up the local economy, the local culture, and the local quality of life.
Great, thank you. And I realized that I was probably putting Max in a hard position. I don't know, as a federal employee, if you're allowed to say, well, if I had $1 million, so take it with a grain of salt. But what do you wish people were sort of putting in front of you, and if you had your brother?
Well, to give away money, that's it. That's definitely an honor to be able to do with public dollars, even though there are strings attached to it, and we do quite a bit of that. you know, it's the usual suspects, right? There's no more new things. I think, Kevin touched on some really, really fine points. Doubling down on childcare facilities, doubling down on, housing and things like that. And I think when you're giving away money that's your own like that, or philanthropic opportunity, the flexibility that can come with it, and giving people a wide berth to be able to pivot and move around, which in many of our programs and other programs, they're rigid in a lot of cases. I mean, we get creative. I mean, believe me, I've gotten in trouble a few times for being creative, but that's fine. As long as you don't break the law. So I think, those type of activities to double down on, and the flexibility of funding is key. There's nothing worse than getting an extra $500 million nationally for healthcare facilities or something like that, but then you have to follow the same rules. Getting it out the door and things like that. So I wish there was some more reprieve there. What I wish customers asked more of, I think, Katie touched on it, and I think Kevin did too. Who else has done your project? Well, what other projects are very similar? Because, I call it the community of Vermont. We're very small. We are so fortunate to be able to share and talk and access leadership. So I think, and beyond the borders. I mean, as a federal agency, I have the view of the country, and I see other states doing really interesting things that, I try to share with others. And I think, asking about what's someone else in the region and beyond.
Great. And Katie, I'm going to ask you to wrap it up because we're really getting, we've gotten to time, as I do. And I also wouldn't mind if you would just sort of, throw in just a little bit of a teaser kind of information about what, VLCT is going to be sort of providing as far as resources in this. I mean, getting back to the capacity question, I think VLCT is going to be such an important player.
Yep.
Here.
Agreed. And I'm going to piggyback a little bit onto what Max just said, which was thinking beyond your town lines. And so looking to others who are doing projects, I'm going to use a real life example of Guilford. We needed municipal water. So we partnered with the town of Brattleboro. And so we're an extension of their system. And when you start to think more broadly beyond your community and what's the best way to give resources to our community members, it might mean that you share resources together and think of that in a different way. And there are agreements, there are experts who can help you figure all of that out in terms of ownership. That's a solvable problem for attorneys and consultants. That's easy. Let them sort it all out, but be broad and be bold in your vision. I completely agree with what Kevin said. I completely agree with what Max said. I feel, no shocker, I feel we need housing, that home ownership is a really big challenge for us. We can develop rental housing all day long, but we are not developing home ownership opportunities for those who need them. And it is constricting everything else. I'll quickly pivot to VLCT. We are going to try and backstop towns in terms of the grant compliance, give them tools and templates. I am totally going to call Bobbi. So tell her to buckle up because I'm coming at her, and I will credit her for guidance materials that we can use. A lot of people have already created these materials around, the terms and conditions that are in the ARPA funding. It's all been done before. So why don't I turn to my peers out there in Vermont who have already written guidance docs, work with them, maybe create a new guidance document that becomes the real sort of fallback item that we can make sure that as we develop policies, we're developing them in such a way that they're going to comply with federal guidelines so that we don't have to do this again should we come into a situation where we get a windfall of federal money again. So that's a lot of what I'm doing. I'm also partnering with the RPCs who will be working with individual towns on the projects that they want to do in that planning and preparation piece that Max talked about for projects and helping them frame them up and get them ready to go. So, and I'll be working with RDCs on other components of the ARPA funding. So this is going to be a lot of VLCT linking arms with strong state partners and really having the primary goal of helping our towns, cities, villages be strong, successful, resilient, and sustainable for the future, both economically and
That's it.
yeah,
That's it.
there.
Perfect.
All right, well, that was so beautiful that we should just end right there. But while I have you, Sarah, is it okay if we take a couple more minutes? Okay, good. So I think, we are at this moment at thinking about, SVEP, and we will apply again for our CDI funding, and we're thinking about what's the next iteration. We sort of have evolved it. So this is the self-serving portion of this, where like, well, I've got you. And the whole point of Southern Vermont Economy Project has been sort of like build the networks, build the capacity, do training. And we think about this internal capacity problem a lot in Southeastern Vermont. So we're focused on one specific strategy, which we'll kind of roll out with you guys when it feels a little more ready around project prioritization and assessment. So it'd be something that would sort of help feed better things into our SEDS project process and kind of help just towns do a little more situational awareness. We've also been taking this kind of approach into our community facilities tactical assistance, where as Max said, like you got to eat that elephant, like, one bite at a time. And so teaching people a little bit more about like how we do that, part of the special sauce in our shop is trying to make that project management interface with that grant, right? Does our plan and our program execution match up with our budget, but also just, do our metrics match up on a monthly and quarterly basis? And so we use a lot of, we embrace, Asana and project management tools. One of the things we are doing is, teaching people how to do their grant that way when they're kind of in that process. Just giving some specifics. I'd love any thoughts that you have around, what we could do in the coming years to continue to try to build that capacity. And also what are like the problems, I think, and that might be just simply, there needs to be more, selfishly, I'm gonna say there maybe needs to be more capacity in regional agencies dedicated to helping build capacity in local things. I don't know. But I would love any thoughts that you have on how we're going to take on that problem, because I think we're already seeing that like well-funded and well-organized projects and organizations are getting more money and great smaller things aren't yet. So help. Who wants to start on that one?
Max is the brave one.
Yeah, well,
Thank
my agency, and I know BDCC and other agencies have had the opportunity to get vistas. I think a volunteer and service to America. I think those are key programs to be entertaining for, just that incremental additional capacity that could help the specialized person do their specialized work while someone else is doing some other work in the organization. I know, for us personally, we funded the technical assistance programs. We have a resource sheet of all the different funders. VCRD and NCIC are two statewide resources that can help with the programs. BDCC is in our region that has some money that can paid staff to be able to help, as you say, shepherd a project. Maybe it's technical assistance like an engineering work or some architectural work and stuff like that. I think that's it. And then for these other organizations, including the not-for-profits, what I find is everybody's busy. I mean, we're bombarded with so much every single day, and then our work has just become so much more efficient with the Zoom calls, so we're doing more, right? I think, reaching out and asking for people to participate on your board by their expertise. Most people will say, I'm not joining another board, I'm on 6. But if you can come to someone and say, I need your assistance as an accountant for 2 months on this particular project, and then we will let you go and we won't dog you forever and keep you as a perpetual board member. So think about is, when you're trying to get resources, the strategy is give them a defined timeline to be able to add to your project and then cut them loose. Because if you ask them an open-ended commitment, they're not going to do it. And they're busy. We're all busy. But I think people will find the ability to carve it out is some of my initial observations.
Love that.
Can I just piggyback? Sorry to keep doing this, but
Oh, please.
what you just said, Max, is what I've told people and what I tell people. I am not joining your board. I do not have time. But what I will do is I will give you a half hour every 2 weeks. And you know what? I put my earbuds in and I walk through the grocery store sometimes talking to people saying, okay, you want to do this? And I get to multitask and still not really give up my time, but I get to help that organization by I just say to them, are you at your computer or do you have a pen and paper handy? Start writing, fire away, 30 minutes, ready, set, go. And then that's it. And it's amazing when you force people into that timeline, you can get great information out of them. And busy people are spread really thinly. And if you put it to them in that way, it's like, oh, I guess I can't say no. You know, and you get that expertise. And it could be 5 little morsels that completely change how you're going to do something for the better. So that's a great idea. No board commitment. You don't even have to participate on a committee. You in? It's like, okay.
I think I'm just thinking practically around the ability to secure funds. I think that is a gap. Even I know for a fact, well, I shouldn't say for a fact because I don't have my data in front of me, but I know that Vermont leaves a ton of federal money on the table because there is no internal capacity in many of our state agencies for someone to write and then manage the grants and or to write the grant proposals. They do have grants managers, but I'd say that's the same thing for nonprofits. I worked for 20 plus years in the nonprofit sector as a development person, and I was lucky because I was with a big organization with a budget. So for those of you that aren't with big organizations and a budget, I would really encourage you to think about how can we collaborate around hiring a staff, not hiring, but or developing a consultant that you use among 3 different partner organizations that get to know each of your organizations really well, so that they can help you with that part of your funding search. It's probably a little bit more complicated than how I laid it out, but I think Vermont, we are too small to have a development director in every single nonprofit organization. If I could have a wish, I would probably do that. I think that would probably help the nonprofit sector an awful lot. But in the absence of that, collaboration, sharing is really the way to go. And sharing program models, I'm glad you brought that up, because we don't want to fund something if the right solution's already there. We will help fund the implementation of the right solution, however, so as well. And it's challenging, but I always tell people, I can tell you what your chances are of securing funds if you don't submit a grant proposal. I can't promise you what they're going to be if you do, but it's going to be better than 0. So and don't give up. It takes multiple times sometimes to get through to a funding source. It can take a couple years. It can take a couple of applications. Sometimes that first application is your introduction to a potential long-term funding partner. So I hope you just go out into this beautiful day and weekend and just remember that hope is what really pulls us towards the impact of our work. And I just am so appreciative for all of you what you're doing for the state of Vermont.
I got you.
All right, well, I wrote that one down verbatim. That was lovely. Thank you. So, let you go back to these notes. All right, I'm going to stop it there and give Sarah a couple minutes to actually wrap up her awesome event.
Thank
I
you.
have to jump off for a call. Thank you, everybody.
Thank you.
Thank you so much. Have a wonderful weekend.
Thanks,
You
everyone.
too.
Thank you. Take care.
And I will provide contacts for our speakers when I send out an email after this. So if you do have direct questions for them, please, I think they made it pretty clear, reach out, ask your questions. Before I close out, I guess I just want to see if there are any outstanding questions or thoughts before we head back out into the day. I do want to be mindful of everyone's time. So thoughts, comments, questions?
I think
this session was very good. Thank you for bringing together the people on that last session. There was a lot of good information there and a lot of things to follow up on. So appreciate that. Thanks so much.
Great. Thanks, Lynn. I appreciate that. Anyone else?
Just a thank you.
Okay, John,
Great
you're
show.
welcome. And I do want to just remind people that if you do want some one-on-one time with Gary, who presented yesterday, there are still spots open. So again, use that expertise, that free expertise, you know, probably the best price you'll get out there. So be sure to shoot me an email, and there are times on the 29th and on the 1st next week. So thank you again for attending, and I will send out an email with links to the recordings, presentations, and contact information. And we look forward to seeing you. The next session in the project development series is project management. We've developed a 3-month course with an instructor that'll be meeting once a week for 3 months. There is limited capacity, but once we have all the details together, we will release that. And so keep an eye out for that training. And thank you, everyone, and enjoy your weekend.
All right. Thank you.